Hello everyone, this video is for those of you who need a revision of the topic depreciation and missed my last class on this chapter. In this video we shall solve a problem that will include preparing fixed asset accounts, provision for depreciation accounts and disposal accounts so that you can recall everything you learned in this chapter and get rid of all your confusions. So let's start with question number 5 of May 2008. So here goes the question. As you can see, we have four requirements here, A, B, C and D. Since the first two are about preparing plant and machinery account and motor vehicle account, which are basically fixed asset accounts, let us first recall how the format of a fixed asset account actually looks like. This is the format of a fixed asset account. As you can see, we have balance BD on the debit side along with cash, bank or creditors, and on the credit side we have asset disposal and balance CD. A very easy way to remember the format is to keep in mind that any sort of purchases made in the current financial year will be recorded on the debit side of the fixed asset account, and any disposal or sale of fixed asset will be recorded on the credit side of that account. Another important thing that you need to keep in mind is that every item you record in this particular account will be recorded at the cost price of that item, the price you paid for it when you purchased it. I will start with balance BD and explain what it actually stands for in this account. Balance BD simply represents the balance of the fixed assets that we have in the beginning of the current financial year. This is what we actually bring down from the previous year. Let's say we are preparing this account for 2008 and at the end of 2007 we are left with 2 million worth of fixed assets. So this balance of 2 million will be brought down as BD in 2008. Balance BD actually represents the cost price of the total fixed assets that we are starting our current year with, the amount of fixed assets that we have in the beginning of the year. So therefore, BD stands for the amount of fixed assets that we have in the beginning of the current financial year. Now comes the cash, bank or creditors on the debit side. Just like I said, this only stands for any purchases of fixed asset we make in the current year. If we pay by cash, it will be recorded as cash. If by check, it will be recorded as bank. And if it has been purchased on credit, it will be recorded by the name of the creditor. The asset disposal on the credit side represents any sale of fixed asset made in the current financial year. Always remember, the disposal will be recorded at the cost price of the asset that has been disposed. Suppose you have disposed machinery for £40,000 which you purchased by £100,000. So the cost price here is £100,000 and the selling price is £40,000. And therefore, we will record the asset disposal on the credit side by £100,000 and not by £40,000. Let's start with requirement A, where we have been asked to prepare a plant and machinery account. The first item we need for this account is the balance BD, or the balance of plant and machinery we have at the first date of the current financial year. As you can see in the question, the financial year starts at 1 May 2007 and they have already given the balances of the accounts at this date. Since we are preparing the plant and machinery account, which is a fixed asset, we will look for the balance under the fixed assets at cost as at 1 May 2007 heading. This balance of £500,000 of plant and machinery is the balance we have at 1 May 2007, which will be posted as balance BD on the debit side of the plant and machinery account. And now we are done with recording the first entry of this account, and we are supposed to look for any purchases or disposals that we have made in the current financial year. This first paragraph provides information regarding the plant and machinery account. What we need to figure out from this paragraph are any disposal or purchases that we have made. If you read the question, you will notice they have mentioned the plant and machinery that originally cost £200,000 of a written down value or net book value of £50,000 were sold at a loss of £10,000. And also, they have mentioned there were no purchases of plant and machinery in that year. So since they have already mentioned we have no purchases, so there is nothing else we can record with balance BD on the debit side. So let's record the disposal. I have already explained how every item you record in this account will be recorded at cost price. So the disposal will also be recorded at the cost price of the disposed asset. Therefore, disposal will be recorded by £200 on the credit side, as according to the question, the disposed plant and machinery originally cost £200,000. Since we are already done recording the balance BD on the debit side, now we will record disposal with £200,000 on the credit side like this. And we are done posting everything we were provided with in the question, so now we balance the account like this with balance CD with the last date of the current financial year and bring the balance down with the first date of the next year. We are done preparing our first account, and this account pretty much talks about the transactions of plant and machinery in the year. We started the year with plant and machinery worth £500,000 and disposed worth £200,000. There were no purchases of plant and machinery, and thus we are left with £300,000 of plant and machinery at the end of the current financial year, and this is what we start our next financial year with. Our next requirement is to make a motor vehicle account, which is also a fixed asset account. Since we have already prepared the plant and machinery account, I hope this is going to be very easy for us. The steps are the same: looking for a balance BD, any purchases and any disposal, and record them according to the format and balance it off. According to the question, we had motor vehicles worth £200,000 at 1 May 2007, which will be recorded as balance BD on the debit side of the motor vehicle account, just like this. The last paragraph of the question gives information about motor vehicles. It has been mentioned that new fleet of motor vehicles of £100,000 were purchased on 1 February 2008, and also there were no disposals of motor vehicle in that year. So since there were no disposals of motor vehicles, we have only one item to record, which is the purchase of motor vehicle, that will be recorded on the debit side of the motor vehicle account according to the fixed asset account format. So this is how we record the purchase of the motor vehicle made on 1 February 2008 on the debit side with £100,000 bank, and it has been recorded as bank because the question clearly mentions that the payment was made by check. So again, the question clearly mentions that there were no disposals of motor vehicle in that year, so we have nothing else that we can record in the motor vehicle account after we have already recorded the purchase and balance BD and everything. So the last thing we need to do is to balance the motor vehicle account off and bring that balance down according to the date of the next year, which is 1 May 2008. We are halfway through the problem. The next requirement is to prepare a provision for depreciation account of plant and machinery. So before we start, let's take a look at the format of a provision for depreciation account and recall what we learned in the last class. This is the format of a provision for depreciation account. We have balance BD and profit and loss account on the credit side, and asset disposal and balance CD on the debit side. I will be explaining what each of these items stands for. The balance BD will always be on the credit side in a provision for depreciation account. It is actually the accumulated depreciation of the fixed asset until the end of the last year. Suppose we purchase an asset on 2006 and we are preparing the account for 2008. Before 2008, we have already depreciated that asset in 2006 and 2007. So balance BD will be the total or accumulated depreciation of that asset in 2006 and 2007. And in 2008, that value will be used to add with the new depreciation that we will find in 2008. Profit and loss account on the credit side stands for the current year depreciation. For example, if we are preparing the provision for depreciation account for 2008, then profit and loss account is the total depreciation of that particular year 2008. This is posted on the credit side of the provision for depreciation account so that we could add this value with the balance BD, which is the total depreciation of this asset before 2008. So what does disposal have to do in depreciation? When we dispose an asset, it is no longer a part of our calculation of depreciation, so we need to cancel it off, which is why it is recorded on the debit side. The term asset disposal stands for the total depreciation of the asset that we have disposed in the current financial year. Let's say we have purchased a motor vehicle in 2008 and used it for 2 years. So we will depreciate it for 2 years, and the depreciation per year was £1,000. Now we have decided to sell it off in the third year, which is 2008. So in 2008, we need to cancel the total depreciation of 2006 and 2008. So if the depreciation per year was £1,000, the depreciation for 2006 and 2008 in total is supposed to be £2,000. And we will record this depreciation on the debit side of the provision for depreciation as disposal with £2,000 and simply cancel it from all calculation of depreciation. So again, an easy way to prepare the provision for depreciation account is to look for 3 items: balance BD, which will be posted on the credit side, profit and loss, which is the depreciation of the current financial year, and the total depreciation of any asset that has been disposed, which is disposal, that will be posted on the debit side of the provision for depreciation account. Since the first thing we need to look for is balance BD, We can see in the question we have the balances for provision for depreciation as at 1 May 2007, which is 200,000 for plant and machinery. So what we will do is we will pick this item up and record it in the credit side of the plant and machinery account as balance BD with 200,000 pounds. The next item to look for is disposal, which is the total depreciation of the disposed asset. In the question they have mentioned on 31 December 2007, plant and machinery which originally cost 200,000 with a written down value of 50,000 were sold. So the plant and machinery that we sold had a cost price of 200,000, and while we were disposing it, it had a value of 50,000. So from the day we purchased it till the day we disposed it, we lost 150,000 worth of plant and machinery. So this 150,000 value is actually the value of depreciation, since the definition of depreciation says that it is the loss in the value of a fixed asset throughout its useful life. This is the calculation of the total depreciation of the disposed asset. So while we purchased the disposed asset, its value was 200,000 pounds, and while we were disposing it, its value was 50,000 pounds. So throughout its useful life, its value decreased from 200,000 pounds to 50,000 pounds. Therefore, the accumulated depreciation of the disposed asset is 150,000 pounds according to this calculation. So now when we have the accumulated depreciation of the disposed asset, we will record it on the debit side of the provision for depreciation account as disposal, with 31 December 2007 as the date and 150,000 pounds as the value. The last thing we need to figure out is the value of profit and loss account that will be entered on the credit side of the provision for depreciation account. We have an important information mentioned here which says a full year depreciation will be charged in the year of purchase and no depreciation will be charged in the year of disposal. Which means no matter whenever we purchase or dispose an asset, even if it's purchased or disposed on the last day of the year, we will charge a whole year depreciation in the year we purchase it and charge no depreciation in the year we dispose it. So if we look at the first paragraph of the question, we can see that we had no purchases of plant and machinery during the year ended 31 April 2008, but we had a disposal that was made on 31 December 2007 and which was worth 200,000 pounds. So according to the policy, we cannot take into account the depreciation of the disposed asset. So in the beginning of the year, we had plant and machinery worth 500,000 pounds, and then we sold off 200,000 pounds of plant and machinery. So at the end of the year, we are left with 500,000 pounds minus 200,000 pounds, which is 300,000 pounds of plant and machinery, and this 300 pounds is the value that we will be using to calculate the value of the profit and loss account, which is actually the total depreciation of the current financial year. The next thing we need to know to calculate the value of the profit and loss account of provision for depreciation account is the depreciation policy that we will be using to depreciate our existing fixed assets throughout the current financial year. So according to the question, the depreciation policy for plant and machinery is 10% per annum on straight line basis. So reminding you of straight line method, it's a method of calculating depreciation where we charge a simple percentage of depreciation on cost price of an asset. So we have already calculated the cost price of the remaining fixed asset that we have after we have made all the disposals. We had 500,000 worth of plant and machinery, and then we sold 200,000 cost price of plant and machinery, and now we are left with 300,000 cost price of plant and machinery, which means the plant and machinery that we now have had an original cost of 300,000 pounds, on which we will be charging 10%, and the depreciation value of the existing current financial year is 30,000, and this is the value that we will be using as profit and loss account on the credit side of the provision for depreciation account. So this is where we record the value we have just calculated, 30,000 profit and loss on the credit side, and this is the value of the total depreciation of the existing assets in the current financial year. One thing that you need to notice here is that the date of the profit and loss account will always be the last date of the current financial year. Our year started at 1 May 2007, which is the date for PD, and the last date of the current financial year is 30 April 2008. So the date for profit and loss will also be 30 April 2008. And we are done recording the 3 items that we needed to record to prepare the provision for depreciation account. We have posted balance BD and profit and loss on the credit side, and we have posted disposal account on the debit side. The last thing we need to do is to balance this account off and bring the balance down with the first date of the next financial year, which is 1 May 2008. And we are almost done. The last requirement is to prepare a disposal account to identify the profit or loss on disposal. So let's first recall the format of a disposal account. Here's the format of a disposal account. As you can see, we have fixed asset at cost and profit and loss on the debit side, and in the credit side we have provision for depreciation, cash, and profit and loss account, which I'm going to explain what each of these stands for. Fixed asset at cost stands for the cost price of the asset that we have disposed. For example, if we have disposed a machinery worth 20,000, then we will record it as machinery in the debit side with the value 20,000 pounds. Provision for depreciation stands for the total depreciation of the disposed asset. This is the same value that we have just calculated in the provision for depreciation account for the heading disposal, which is 150,000. Cash simply stands for the selling price of the disposed asset. Suppose we sold a fixed asset or a machinery for 20,000 cash, so that will be recorded as 20,000 cash on the credit side of disposal account. If it was paid by check, it would have been recorded as bank on the credit side of disposal account. Once we are done recording these 3 items, the last thing we need to do is to balance this account with profit and loss. Profit and loss can be either on the debit side or on the credit side of the disposal account. It depends on whether we made a gain on disposal or a loss on disposal. If we made a gain on disposal, then profit and loss will be on the debit side of the disposal account, and if it is a loss on disposal, then profit and loss will be on the credit side of the disposal account. To start with the depreciation account, the first thing we need is the cost price of the disposed asset. So the question mentions that on 31 December 2007, plant and machinery which originally cost 200,000 with a written down value of 50,000 were sold at a loss of 10,000. So the plant and machinery we sold had a cost price of 200,000. So this will be recorded on the debit side of the disposal account as plant and machinery of 200,000. So now when we are done recording the cost price of the plant and machinery we have disposed, the next thing we need to find out is the accumulated depreciation or the total depreciation of the disposed plant and machinery, which is the exact value that we have calculated while calculating the value of disposal in the provision for depreciation account. While we purchased the asset, the cost price was 200,000. While we were selling it, its value was 50,000. So throughout its entire life, it had an accumulated depreciation of 150,000, and this is the value that we will be recording on the credit side of the disposal account as provision for depreciation. After recording provision for depreciation of the disposed asset, we need to calculate and record the selling price of the disposed plant and machinery. So the question says, on 31 December 2007, plant and machinery, which originally cost 200,000 pounds with a written down value of 50,000 pounds, were sold at a loss of 10,000. So we do not have the selling price clearly mentioned here, but the selling price can be easily calculated using the net book value and the loss. So the written down value is actually the net book value, which is the current value of the fixed asset. So if we are selling at a price more than the net book value, it means we are making a profit. If we are selling at a price less than the net book value, we are actually making a loss, and they have already mentioned that we have made a loss of 10,000 pounds. So if we have made a loss of 10,000 pounds and if the net book value is 50,000, then clearly the selling price is supposed to be 50,000 minus 10,000, which is 40,000 pounds. So the selling price that we will record on the credit side of disposal account as bank will be 40,000 pounds. So as we are done recording the cost price of the disposed plant and machinery, the provision for depreciation and the selling price, now we can simply balance the account and get the profit or loss on disposal. So the profit and loss comes on the credit side by balancing, which means that we made a loss of 10,000. Well, that was actually mentioned in the question, that the plant and machinery were disposed at a loss of 10,000. So as an alternative, what we could do is we could calculate the selling price at the end, and we could simply put profit and loss on the credit side of the disposal account as 10,000 and then balance the account and calculate the selling price as bank, which is 40,000. And we are done with this problem. I hope through this video you got a revision of the topic depreciation and disposal of fixed assets and learn how to prepare a fixed asset account, a provision for depreciation account, and a disposal account. Thanks for watching.